seen something like me.
Yep. How do I pronounce your surname properly?
Boris Katsnelson.
Katsnelson. Right.
Sir.
Thank you. Hello and welcome to another episode of Walking with Walfinch, the Vegas edition. I'm joined today by Boris Katsnelson. Very excited to have Boris here today. Thank you for joining us.
Yeah, pleasure. Excited to go on this journey with you here.
Ready for the convention?
Already.
Yeah.
Been here, got to Vegas on Saturday, so I got to go to the Sphere and see the Eagles play. Yeah.
Nice.
What an experience.
Very cool.
Yeah, very
and
fun.
you're fully sort of Vegas acclimatized now,
Yes,
right? So
yes.
You're ready for it. So Boris, you've done a lot, you do a lot. What is it that you do now?
So now I am an investment banker, which means I sell companies.
Yeah.
And we're generalists, but I have a specific specialty in franchising.
Okay.
Multi-unit franchisees and franchisors.
Yeah.
What we really do. About 3/4 of my business is in those sectors.
Is that right? Wow. And there's an interesting story in how you got to that.
Yeah.
I wonder if you wouldn't mind sharing.
Yeah, so in 2013, I was really keen on buying a business. And so I did what's called the entrepreneurship through acquisition model. And we was backed by a family office to go look for a business to buy that I would step in and run where a baby boomer was kind of ready to retire. So we bought a brand called Speedpro, which is a sign and graphics printing business. Mm-hmm. And so I ran that as CEO for about 3.5 years. And we grew the system, put in systems, all the things, and It was a great experience. And then I sold my equity back to my family office partner.
Amazing. Where did you take it from and to?
Yeah, we had a little over 100 units when I bought the business in 2014, and then we took it to about mid-130s, high 130s
nice.
In terms of units, but really changed a lot of the structure of the system and things like that. We had regional developers, we kind of rationalized that model so we could do support directly that would be better for the franchisees and such.
Yeah.
And then after that, I bought two businesses, pretty crazy summer, but bought two businesses in the span of 90 days.
Wowzers.
Yeah. One was a moving and junk business. That was a bit of a turnaround in the college hunks hauling junk and moving brand.
Yeah.
Big orange trucks that people may know about.
Yeah.
And then a Primrose preschool, so early childhood education.
That's
space.
interesting.
And so I've seen kind of both sides of the market.
Yeah.
And I started my career on Wall Street doing like bulge bracket M&A and financings, then at a family office. So I've touched a lot of parts of the ecosystem, but franchising is a really interesting business industry. I've got deep roots, deep connections, and beyond kind of a lot of people in my role as an investment banker, they don't have the operating experience. So I can bring a lot to my clients. For instance, just last Friday, talking to a client, I said, well, what are you looking for? I'm going to the convention, anything I can help with. We want some help in the marketing area, and so I've made a couple connections already for them.
Amazing.
So makes me a little different than the average share.
It's very rich experience that you come with now. I think it's really interesting if Boris today could speak to the original investment banking Boris. So I wonder what advice you'd give him.
Yeah, I mean, I would say I really wouldn't change anything. Not that everything's perfect in life, but everything happens for a reason, experience-wise, and it's been like a really amazing journey. And I'd say the experience share I would say to myself, early self, would be, get that hands-on operating experience early. Like it was really fun, and it just shows you how just selling businesses, running businesses. Until you're in the seat, you don't know.
Yeah.
Right? I started out, buying companies and things like that and advising companies. But until you're in the seat, it's a whole different animal, as you know, as an operator.
No, well, absolutely. And I think actually, often it looks very glamorous, but as I often joke with friends of mine, it's more cleaning toilets and smoking cigars, right? It's
a lot of hard work.
It's a lot of work, and I think that's the point. You've really got to want to be putting a shift in, and if you're not going to do the work, then you've got to think, well, is it for me? Should I be doing this, or should I just continue with the career and so on?
100%.
So Boris, if I was buying a business today, what would that look like? So if I was, and does it matter on different sectors, when I'm talking about resale values and so on.
Yeah.
I mean, if I'm totally green and I'm looking at buying a business, I don't know what sector I want to get into. I know I want to buy into a franchise because of the support and, and I have a bit of that going on. But how would I do it? What would I do?
Yeah, so we work with, our clients are either multi-unit franchisees or franchisors.
Okay.
Right, so we can unpack kind of both sides of it. On the multi-unit franchisees, we're working with folks that are, 4 or 5 units and up in a brand typically, or a scaled single location. There's certain like B2B concepts like the one that I ran, Speedpro. There are hardly any multi-unit operators because they don't have territorial restrictions and things like that. You just simply, can do business anywhere, right?
Yeah.
So if someone's looking at a business, it's a multi-unit franchisee, and all the things you said is, when we've got, multiple businesses on the market, we talk about that a lot, and that support is really critical, right? Because you're paying a royalty, you're getting a brand, you have to have that support that comes along in the as part of the package. So when people evaluate, they're looking at really kind of what businesses are interesting. Where do I have a passion? Do I want to help people, as in your business? Do I want to do printing services? Do I want to own a gym, fitness business, all those kind of things? And then it's the economics of it as well, right? So when we put our package together on a business, it's incredibly detailed to look at the financials, where the business is going, what the team looks like. So, do the numbers work for you? Because most people, at least in the US market, are financing it. So we'll get the deals pre-qualified, all those things. And then they got to make sure that the financials work for them after they service the debt. It's a big analysis at the end of the day. So, I think it's passion at the core, and do the numbers work for you? And can you see yourself in the business? Because with franchising, as we're at the IFA convention. There's 3,000, 4,000 different franchise brands out there. So the world is your oyster, but I think established businesses are, for most people, but for the right person, it's the better way to go, because it's not the de novo startup. You don't have the startup risk involved in it. You're buying existing cash flow, and there's a lot of value to that.
I think that's really interesting. I mean, I've almost always started businesses from scratch, but the thing that's problematic in that is that there is no existing cash flow. So that's that scary kind of churn part of it.
Absolutely.
And so one of the things that I'd love to ask you about is, what does that typical resale look like? So if I think about exit multiples, for example, I mean, how much does that differ from home care to restaurants to printing?
Yeah, it's a tighter band than you might think, and it depends on size is the biggest part of it. Right. And when we take something to market, we're doing deep work on, what is the seller's discretionary earnings, which basically means, if I come in as the buyer, as an owner operator, right? So that's why we sort of just level the playing field for everybody to see it. So the businesses we work on are really $750,000 at a minimum, and individuals deals are probably up to $1.5 to $2 million of that SDE number. So depending on sector, and the trends ultimately also matter, right? We've got some businesses that are somewhat flat to down, some are growing really fast, but the top end is sort of buffered by the fact that financing is really what drives it, right? So you can't really push much more above a 4x multiple on that SDE. And on the lower end, maybe lower growing businesses or declining businesses, you might be below 3 times multiple.
Okay.
Right? But it's in that band, and if we run a really good, robust process, which is part of our model, right? We're putting together materials that are, in the case of a multi-unit franchise gym business, it's a 90-page deck.
Wow.
Just chock full of information with financials supporting it.
Headlines, top 3 things that I'd be looking at in that. If you were picking that document up now with all the experience that you've got, where's the top 3 things that you're going to immediately to sort of just sense check and just sniff out whether you want to read the whole deck?
Yeah, I think does the financial picture work for me and what I'm looking for myself and my family, right? The numbers pencil out is number one, and then what does it take to run it, right? And getting a sense of like, what does the team look like? Can I see myself doing it? And then it's, those are the main questions to me, those couple of things.
Yeah, do the numbers work and do I want to do it, basically?
Correct.
Great.
Yeah.
That's, I love the simplicity of that as well, actually, because actually, I think we can make businesses like voodoo, and it's, but it's not really, and it's usually as simple as, well, can I buy it and run it, because the business operates and the mechanics work, and do I want to do it?
Yeah,
and I love that. So how does it differentiate between franchisee and franchisor? So, you've got that typical 3 to 4x multiple with a multi-unit franchisee.
Yep.
What about with a franchisor? What does that look like?
Yeah.
And again, is it size related and so on?
Yeah, usually it's, industry does matter to some degree, but it is a lot of, meaning like if there's recurring revenue businesses like gym businesses where you've got subscriptions and things like that, then it's, you can push the multiple a bit higher.
Okay.
But it's EBITDA driven largely, right?
Yeah.
So at a certain EBITDA levels, you're talking about, multiples will go up, right? And usually that threshold is in the 2 million at EBITDA and up.
Yeah.
Is where
2 million EBITDA and up is kind of where it's at. Are you saying
where it starts seeing like some inflection point growing, and then again at 5, we'll see 1 to 2 multiple turns higher when you go in those sort of thresholds.
Should we just go? I'm sorry. Should we just go on the pavement over here, just to
not get mowed over?
Yeah. It's
I'm
sorry.
really worried about Dan.
Yeah. I'm sort of sensibly insured, but
we still don't want him going down.
We'll have to just wheel him backwards. So. Okay. Great. So if we just do that again at the 2 million P. So Boris, you're saying about that 2 million EBITDA level is where it really starts to kind of make sense numbers wise.
Yeah, well, it's, you can sell a business. The thing about franchisors, just to level set, is that, it's a business that, as you get to scale, that EBITDA ramp starts going up pretty nicely. Your franchisees mature, they start, paying more in royalties and all that. Early on, it's hard, you run an emerging franchisor, right? You get people in, you get some initial franchise fees. The market doesn't value the cash flow from that very much because it's one time in nature. What people like is the recurring revenue, royalty stream, right? And the EBITDA associated with that. So with that as a baseline, right? People, you can transact at, below 2 of EBITDA. But to your point, that is kind of where it starts really making sense. And at 2, depending on, industry does matter, but I would say you're in the market as we sit today in February of 2026, 2 of EBITDA, I'll give you a kind of a wide range, but it's probably a 6 to 10 multiple, right? And those dynamics, and that's wide, and it depends on the industry, depends on the dynamics, depends on, do you have a bunch of development agreements that people are going to actually execute on that are not actually a liability and all that. And then when you get above 5 of EBITDA, you start seeing a couple of turns incremental on top of that. So maybe it's 8 to 12, even pushing above 12. I've seen, deals in the 15 range in this market today for something that has, more recurring revenue, 300 and plus franchisees, that kind of dynamic. And so, what we do is, our model is we want to get to know folks early and be helpful, like I was saying earlier, right? We want to be a resource to help them grow, and it may not be the right timing for brands to do that. And we just want to educate them on the market, and the market changes, all the time, depending on interest rates, all those kind of things. But that's the work we do at Black Iron.
I think that's really interesting because I was reading this wonderful book called Big Money by Alicia Miller. I don't know if you've come across it.
I know Alicia, but I haven't read her book. Yeah.
It's a great book, and I read the book before I met Alicia. I was like, this is just like it's a real manual in what to sort of understand about franchising within with private equity and so on. Because actually in the UK we don't have loads of that. Of course it exists, but actually exists largely through American transactions that are happening in the UK, as opposed to the local. Culturally, I think we we look at it differently.
Okay.
We are often looking at businesses to get into, to stay, to pass on. There's that kind of still that kind of almost that mindset around that feudal system in many ways, which is good and bad. Actually, I've got to say, I think so. I think this. One of the things I found really interesting looking at that was looking at historic transactions that have happened, and obviously, within that book, I mean, there are things about huge transactions, but it really got me thinking about what the value. I think, as a franchisor, often, we all know franchisors are great, and franchisors are not so great.
Yeah.
And I think the interesting piece is, as a franchisor, you think, well, you must invest because actually you as well are building this wonderful asset that might have these sort of double-digit returns.
Yes.
And I wonder, if I'm not wrong, I feel like the multiple ratios have declined in the last 5 or 10 years. Is that right? Is that in relation to increasing interest rates, or or have I guessed that incorrectly?
No, you're right, and the biggest factor being that it's interest rates, because the private equity folks, which I was one for a good chunk of my career, you're looking at internal rate of return, or IRR, right, on the deal, and your cost of capital, the financing rate, and interest rates drive that, are a huge part of that dynamic. And so you just can't pay as much as you could. So with in the U.S. market, we're expecting additional rate cuts, new Fed chairman coming in May. So, I think multiples will increase, but I will say that the franchisor market by private equity is, I think still very hot, very interesting. I've got, good friends in it, and we talk regularly with, private equity buyers on our businesses. So there's no shortage of people interested in it. It's just, a function of what can they pay. So there's a little bit of tempering that, I'd say, with where rates are at the moment, but it's going to continue to increase. Yeah,
I mean, and even still, I mean, I think the numbers between 6 and 15 is kind of
it's a wide range.
It's a wide range, but also that's wild, right?
Still great,
with a franchisor doing 2 million EBITDA, I mean, that is really sort of quite transformative, I think. It's and you're seeing more and more of that with franchisees that are multi-unit and have just huge operations as well. I think the numbers start to really get interesting after a while. I think that's particularly impressive with my thoughts on that, really.
No, 100%. I think the market's on fire for franchising still, I would say. I mean, it's only going to get better with rates coming down, but still very attractive because of the model, and it's a very
sorry, just one sec. You want to just walk into the middle of the road over there, as in so you're halfway through?
Oh, it's just crashing out. Is it looking for you?
Yeah, no, okay, yeah. Just so you're safe.
Yeah.
Then we'll come, and then you can just cross, and we'll just wait there, and you cross.
Well,
you've still got us, right? Yeah, we can carry on going.
We probably have to go because.
Yep, there we go. So I mean, the market is still relatively hot, I think. I mean, it's really. I think being a business owner, having started as a sole trader, worked as a limited company, worked as a franchisee, now franchisor. I think if you can get into resales like that, I mean, it saves 5 years.
Oh, 100%.
And yes, it's expensive, but actually it's a 5-year kind of jumpstart, right?
Yeah, 100%. Yeah, I think, franchisees going into it, like I bought 2 resales myself, right, for my background, right? And I just think about that at the end of the day, how I evaluated them, just sort of circling back onto your earlier question, is just, what is the, can you see yourself running this business? What are the cash flow characteristics? And, do you have that support? That's really kind of core to it. And if the answer is yes, can you finance it? And then you've got your free cash flow, whereas it's an unknown on a resale.
Yeah, well, and that's it, And so if you look, 5 years ahead for yourself, Boris, what does it look like? I mean, your journey has been really interesting, from entrepreneurship to what you're doing right now. I think it's a really wonderful transaction that you've had personally as well. What does it look like in another 5 years from now?
Well, for me, I really love what I'm doing. I mean, I think it's in so many ways the culmination of all the things that I've done and landing to the place where it's just genuine satisfaction and helping business owners kind of achieve success.
Yeah.
So I see myself doing the same thing, truly.
Yeah.
Maybe slightly bigger opportunities, a slightly bigger team doing it to help me. But I think doing the same thing, could I see myself, I'd say the one potential is getting in as an equity owner in some sort of a franchise brand at a franchisor level, but not be the operator. That would be very important for me. But offering my wisdom in that regard. I am on a board of an emerging franchisor called Liftology that is, in the home access and mobility space. A really good friend of mine is in that. So I would see myself doing more of that type of work with Liftology and others, just to offer help and how to scale and do all those things and leverage my relationships. But no, I love franchising at the core.
What a wonderful place to stop.
That's right.
Thank you so much.
All right, sir.
And thank you for joining on another episode of Walking with Walfinch. I hope you enjoyed it as much as I did. Until next time.